Hi guys, thanks for tuning into another episode of Nuggets News. Well, I am coming to you on a Monday instead of a Sunday. I do apologise for that, guys. Had a very big week. It's been absolutely crazy lately, I guess, in the world of DeFi and yield farming, and did get a little bit behind. We've been doing a heap of spring cleaning in the office. You might notice I've got a new chair. We've been tinkering with all the audio, trying to get that right for all our member live stream videos as well. So look, hopefully we've sorted all that out. And this week we are coming to you a day late. But other than that, nothing has changed. So we do welcome nearly 1,000 new subscribers again this week. We put out our August monthly company report. Look, we do like to be really transparent with everything we do at the business. So over 1,000 new members to our premium community last month. That's another record. We've appointed Megan as our digital marketing specialist. So look, the business is doing really well at the moment and we're growing, but every dollar we make, we're basically putting back into either the business or the community to expand and grow our staff and try and get better and better education and research for you guys, because we really want to capitalize on that in the bull market and stay in front of everything, whether it's housing, the world of macro and finance, or the latest in crypto. And it is a very challenging time at the moment to stay on top of absolutely everything that's happening. And we're going to talk about some of that in this week's crypto news as well. So I do just want to start off by giving a big congrats to Alexander. He was this month's member of the month in the community. Did some great write-ups on a number of projects, some of the bleeding edge projects. And I think that's probably the number one thing that's changed, where we've had a core group of 1,000 or so members with us for over 3 years now. Recently, we've grown to nearly 4,000, but a lot of those are very experienced campaigners now, and they're doing their own research and contributing, and we really want to reward them. So they get to choose a friend to join the group for free. They get to choose a charity that we donate to, as well as free membership for themselves as well. So well done, guys, there. But let's get into the local news. So we did have 186,000 customers having their data leaked from Service New South Wales. So each state has these, I guess, government sectors, and we've been undergoing numerous cyber attacks lately, and whether or not that's a coincidence with some of the friction that's happening with other countries or not, but just be aware that there are websites where you can check whether or not your data has been leaked. And just today when I was recording this, we had thousands and thousands of Australians, and the scores from a Chinese military database was leaked as well. So there's a lot happening in terms of the cyber warfare between the two countries at the moment. Australia did extend those insolvency relief packages. This is sort of kicking the can down the road. Martin and I spoke about this at length, but look, Australia is not the only one at the moment that's really struggling to hit those inflation targets that the central banks always aim for. And when you have a look at the real inflation rate to get a bit of an idea of what bonds are paying versus actual measured CPI, we can see that Australia has some of the most deeply negative interest rates. We talk about why gold is doing well in the US because real rates are minus 1%. But in Australia, you're really falling behind if you're not in something like gold. And obviously, I'm a big believer in crypto as well over the long term. That's more volatile in the short term, but it's giving people an excuse to get into other assets. And at the moment, our stock market's not doing that well compared to other countries where it is almost a good option to park in the stock market rather than get left behind. So it's this decision-making process that all these individuals in different countries have to make, because you are getting left behind with everything that's happening around you at the moment, the inflation versus deflationary forces. Okay, so Melbourne economy tipped to suffer a $100 billion hit over 5 years. I really think that Melbourne is kind of like the heart of Australia in a lot of ways, even though New South Wales is the biggest state. And we're hearing reports about how Melbourne property is going to suffer because of all these lockdowns, which have again been extended. But then some people are sort of saying, well, Sydney prices are set to bounce back. Look, I think that the relationship between the two is really going to drag down everyone, the whole nation's economy. And I don't see a situation where Melbourne property, is going down and Sydney property is going up, unless one's in like stage 4 lockdown and the other's basically in a no lockdown whatsoever. So where I do see these pockets of real promise is places like Tasmania, where there's basically no lockdown at all. And that's where people will want to pay the premium to live in a suburb, whether it's rural or in a state that doesn't have any lockdowns and there's a good supply of food, fresh water, clean air. They're the sort of things that people will want to pay a premium for. So I'll let you have a pause of this and read through all the different stats, wages and interest rates to income, and more data out this week from I guess, global sources saying that you should never pay more than 3 times your income for a house. And this is basically what the data is showing here, is that more and more in recent years, people are struggling to keep up. So whether or not you only used to have one wage earner in the family home, and now you've got 1.2 for a lot of households, as more people are going to work in the family, having less kids. So the more money you're pointing to a mortgage, and people still can't keep up. I guess that's the basis of what these slides are trying to show. Martin and I obviously do our deep dive, and that was out a few days ago, so check out that episode. And again, thanks to everyone that is sharing that, because the views are right down compared to what they used to be because of the YouTube algorithm. But basically, one of the biggest things that we are now facing is this fiscal cliff, whether or not the government decide to extend a lot of these measures that are supporting people, because it's an $80 billion cliff that the economy is going to really suffer for if we don't extend those. And that's a bit of a moral thing about whether or not you think the government should be supporting people, or the free market should let all these businesses fail, or whether or not it's those people's fault, whether or not we should even be in lockdown at the moment. They're the sort of questions that we need to be debating. But I guess the fact is that we're not debating those at the moment. And the government measures are, I believe, very wrong, making people withdraw out of their super, which was their retirement nest egg. So 38,000, just Host Plus Super alone members have emptied their super. Why wouldn't the government, who can borrow for basically free, give these people some money to help them out? These people that are going to have no super when they retire are then going to be going to the government to collect more benefits, when their super could have been this huge nest egg if they didn't have to tap into it. So that just doesn't make sense for me. Here we can see the different size businesses and how they've rebounded. So once again, the big businesses with over 200 employees, they've nearly got back to where they started back in March, whereas it's the smaller businesses, and they're the lifeblood of the Australian economy, under 20 employees, which is still really suffering. They haven't really rebounded there. Late payments spike, zombie companies on the rise. We've spoken about this at length, and that all feeds down the chain. One company is late to pay the other company. They don't have the cash flow. They've got to downsize. They default. And these are really, really significant numbers that we got in August from, employment. Are you thinking of hiring more staff? Are you ordering more than last month? 13, 10, these are big falls compared to, June and July. So certainly not the worst of us. The worst of it is behind us here in Australia. This is another fantastic chart, JobKeeper and median wage by industry. And we can see the percentages on the right-hand side here. And it's the lower income sort of jobs where we have the highest share of employees on JobKeeper. So once again, it's the really wealthy folk, people that are getting paid, $2,500 a week. Very few of those on JobKeeper compared to some of these hospitality retail jobs where we have a lot of people trying to get those benefits, and they are going to be the ones that fall off that cliff. This is another fantastic visual representation of how government benefits are just making up basically all 21% of all the growth here in salaries and wages. That annual percentage change there, it's not coming from wages and salaries, it's coming from the government benefits. And that's why I think some people, particularly younger people, we've got a lot of data out now that it's those the younger people that are getting the most benefit. And a lot of them are making more than they ever have before because they're getting their JobKeeper, the payments that were higher than their actual salary. So they're the people that are going to be hit the hardest when this all finishes up. Push for home ownership, a focus over super build up. So again, the wrong thought process here is how can we get people to afford these homes that are unaffordable, rather than to say, well, how can we make housing more affordable, or why is it so unaffordable? And they're saying here, look, we need to really help people build up their super, and then they can dip into their super to afford a house. I just think that the thought process is all back to front once again. Now, the RBA, they are talking about forcing states to buy more government debt. They've pledged that $200 billion in reserves. Now, that is just reserves that banks are able to tap into for lending. At the moment, a lot of the businesses, small businesses in particular, they don't want to take the risk and borrow that money from banks. And the RBA are almost forcing the governments and saying, look, spend more, will almost make the banks buy that debt. This is the problem that they fall into with my sausage machine analogy, where you can push on all these levers, but at the end of the day, you can't really change what comes out if the actual structural problems are there. And they're the structural problems that need to be fixed in Australia. Now, one of the most promising businesses and I guess little sector that's exploded in Australia is this buy now, pay later, because of our obsession with debt and credit cards. But if you think about it, it's nothing that's really unique or innovative. And now we've got a lot of these other big corporates that are catching on to it. So PayPal and Microsoft, they're all going to add this sort of buy now, pay later feature for their customers. So, Apple will probably be next. And that's just when the Aussie businesses that have exploded, they're trying to get into these other countries. And now the other companies that have got the market share in those countries are saying, well, no, we're not going to let you have market share. We're just going to add those features because there's nothing unique about what you're doing. So some of those companies were hit really hard in Australia this week. And look, I won't name names. There's about half a dozen of them these days. And I think it just shows that, again, I just wish Australia would be putting more focus into science, technology, innovation, and value adding rather than helping people go further into debt. So the ASX notched its fourth straight week of losses. Look, technically, I might bring up the chart later on, but technically this is not looking pretty. You know what, let's bring it up now. Compared to a lot of the other indexes around the world, the ASX has just bounced right into the 61.8% retracement. Right into that golden zone, which I love to talk about. And this is what I thought a lot of the other indexes were going to do around the world and have done in previous recessions. So look, until we regain that level in Australia, I don't think it is looking pretty at the moment. Fund managers I talked to are sort of saying, why would you park money in Australia? There's so many opportunities elsewhere around the world. Now, this is the really controversial part, which is going to divide everyone in the comments, but I always said that I'd remain open-minded, and once we've got more information, more data, then I'm happy to change. Now, we've started to get enough data out of Sweden to say, well, why have they been vindicated? And I'm not sure that's entirely true yet, but why have they had so low case numbers when they basically had no lockdowns and didn't force people to wear masks at all? And in Australia, we're still in this stage 4 lockdown with really, really low cases. Now, we don't want to end up like Italy or New York, but again, the truth is somewhere in the middle. We've got to ask, well, why is it that Sweden didn't have such a bad reaction in huge numbers if they didn't really go into this complete lockdown? And that's the conversation that we need to be having in every country, rather than saying, oh, Victoria's going to be in lockdown until we get down to 5 or 10 cases. That's not the right way to think about it. France, still undergoing their second wave. Again, if you're going to do a lot of testing, you're still going to get a lot of numbers. It's some of the other stats that I want to be concentrating on about, well, who are the people that are getting sick? What are the asymptomatic versus hospitalized, the death rate? They're the things that we want to put the puzzle pieces together and compare it with what's happening in Sweden to say, well, do these numbers matter compared to the health outcomes? All right, so over to the Australia-China relations. And look, it is just nuts how some of these Australian citizens were on visas. We're just pulling these people out and saying, you're not allowed to be in our country, and we've got the Australians that are trying to get out of China. Remember a few months ago when this all started with Australia asking for the transparent investigation, then the US get involved, and now these tensions are rising. Chinese farmers are hoarding wheat in hopes of creating shortages. So I thought one idea that I have floated was all about the idea that these currency wars are all well and good, but everyone's currency is backed by nothing. And how do we know that one country is not printing money out of thin air to hoard commodities? And when they start to try and buy up real things, that's when things get interesting. And now it's kind of been asked in more and more of the media about what's going to happen when China starts trying to stockpile all the commodities. Are people just going to keep selling to them? Now, one thing that I just want to touch on was whether or not it's the Australia-China relations. We've seen a lot of rallies lately, and I did talk about how the freedom walks, and people are not going to be happy with some of the police brutality. And we've seen a couple of incidents. It always trends on social media straight away with police clashing with protesters at reasonably peaceful protests again this weekend. And look, I don't think they're going to back down as long as we keep seeing these violent clips on social media. But unfortunately, this is where it's all heading, where people just aren't happy and the message isn't clear. We've got health professionals that are saying what I'm saying about, hey, we need to be having different conversations. And I think the clashes and the civil unrest in Australia, it's pretty small at the moment. Maybe the media are blowing it out of proportion a little bit, But look, I think it's going to continue to grow if nothing else changes. Back to the relations between China and the commodities here. So look, copper has spiked, plenty of demand from China there. Iron ore as well. We see the port inventories trickling lower, but the iron ore price is continuing to grow, and that's what's helped Australia in terms of those surplus and deficit numbers. That we're going okay, and there's no need for the RBA to really print more money. It's up to the government to spend that money that they are getting. Talks about this trilateral trade agreement, so getting Australia more involved with India and Japan, being less reliant on China. This was a good article by our friend Tarek Brooker. And look, I think that's the question that we have to all ask. Nothing against China at all, but if we're going to have these games and we're going to be so reliant where they can almost pull the rug out from under the Australian economy, we want to develop those relationships with other countries. China has continued to push the boundary of their social credit system, but now they've integrated that track and trace corona system with the social credit score. So this is, I guess, the Orwellian nightmare that people want to avoid, and this has started to happen in the UK as well, where they're keeping your DNA and your healthcare data in a database. Australians do not want this either, and I think this is where people are going to get really upset. This is what we wanted to avoid. I don't want this to go down this path either of, the train doesn't work. You can't go to the movies if you haven't had, the latest injection vaccine, whatever it is. That's not the world that we really want to live in. China has launched the first human trials for a nasal COVID nasal spray. So when we get to this point, it becomes, well, in China, if they're going to force everyone to have it, and it's just an aerosolized vaccine, how do you know that they're not just going to spray this in the elevators of the local malls or whatnot? So this is the human rights. Where are you crossing the boundaries once we start to go down this route of credit scores, health scores, and aerosolized vaccines? Anyway, okay, over to Japan. Their economy shrunk 21.8% in second quarter, more than initial estimates. China as a percent of the emerging market cap, we know that they are just powerhouses in terms of almost being number one or two in most by most metrics. But back in the early 2000s, when they still were only really, really tiny in terms of the percent of all the different emerging markets. So they have been the absolute powerhouse there in terms of the amount of concrete and iron ore and all the resources that Australia got to piggyback off this ride from 2000s over the last 20 years. When you look at the chart like that, it's no wonder that we didn't have a recession when we're digging our commodities out of the ground. This is a fantastic visual of the different sectors of debt over in China. And look, they've got a huge percent of debt to GDP, but a lot of that they do owe to themselves rather than to overseas entities. So people talk about the huge China debt load, but if they default on a lot of this, it's only to themselves, so they can print more money, and that gets into the modern monetary theory, I guess. Okay, over to the US. So job hirings, the jolts there, unexpectedly plunge, most on record despite surge in job openings. So in the US, I think it's pretty clear that they're not past the worst of it when we get these numbers in terms of the people that are the first time trying to claim benefits or the continuing claims. The trade war continues to hurt them. Some of these big companies, chip makers, the tech war, TikTok, everything that's going on there is really costing them jobs. Europe looking to declare independence from China. So it's all these, I've said it a number of times, it's the little guy that loses out when these big countries and continents are all bickering over different trade wars. But this week we had a really important meeting with the ECB, and Christine Lagarde's talking about no need to overreact and print more money, or we don't want to get too involved in these currency wars, and we're not going to target a specific exchange rate. And that's when the euro gained and the dollar actually fell. But it was a real whipsaw in currency markets this week, and there's been a strong correlation between Bitcoin, gold, and these currencies. Is, I guess, all eyes are on the US dollar because it's at such an important level. These alternate indicators show that Europe's recovery has been stronger than the US. So the US is this light blue line here, only getting back to about 60-70% of the previous COVID levels, whereas a lot of these European countries are a lot higher, towards the 80% mark here. So the recovery across Europe, if that is stronger, you'd think the European economy and currency is going to be stronger than the US dollar. America's 20 trillion debt pile is getting cheaper as it grows, and this is where they want to report that inflation is only a certain amount so that it's easy for them to grow away the huge pile of debt. We've done in-depth videos about that in the past. Investors are looking to the Fed to soothe the market next week, but that may be a tall order. So the Fed have already topped, federal spending has topped 6 trillion. The deficit is 3 trillion because the Fed and the amount of bonds that they've actually been able to sell has only hit about 3 trillion. So there's a big gap in terms of what the market is willing to buy. And if the Fed buy that up, then it's going to weaken the dollar. Other countries don't really want to buy that up at the moment because they're not that crash hot on the dollar or the currency they're being paid in. So the Fed are kind of on pause at the moment. This is where we see their balance sheet has really gone sideways since May, when it topped out at that $7 trillion mark. 40 million Americans face eviction in 2020. We know that these numbers are bad. Nearly 30 million, that's how many that are collecting the unemployment insurance benefits. Crazy numbers in terms of even the percentages. Here we see the continued claims still around 30 million there. So it was falling, but it has started to rising, and that's what I was talking about before, where the worst is not behind us. The number of children living with their parents is at the highest rate since the Great Depression. So that is now up towards 52% of 18 to 29-year-olds are living with their parents. Highest rates in nearly 100 years. Some states like California have started sending out $900 lump sum unemployment benefits on Labor Day. Some of these states themselves are bankrupt, and this is where it's sort of same in Australia. Who does it fall on? Is it up to the states to spend money and start to step in? Should the national government be doing it? New York commercial real estate plummets 54%, lowest on record. We've got more data out of Moody's here talking about the commercial office space. 35% of companies looking to reduce their office space, more and more people working from home. And it really is so obvious when you look at it like this, COVID in 2020 and just falling off a cliff, the number of businesses that are saying that they're looking to add office space. That's basically zero. And that data that we just spoke about, 35% looking to reduce. Refinancing and delinquencies are soaring in this divided mortgage era. So obviously as people lose their jobs, the mortgage is the first thing, or one of the first things that they are going to have to downsize and look to sell. Private equity firms are storming the leveraged loan market to fund all these payouts. So once again, there's been a huge appetite for some of this corporate debt. And even though a lot of the big companies that issue a lot of this, whether it's oil, shipping companies, whatever it is, they're really struggling, but they can borrow cheap money at the moment. So it's kind of like this merry-go-round that's all going to be well and good. And the Fed haven't actually had to buy many bonds lately. It's just this confidence game that the Fed has our back when everyone is issuing this debt. But regardless, there's a bit of an unknown here why the container rates for shipping are at these records, shattering as your US imports surge. So people don't really know what's going on here, whether it's a bit of a game that's being played, really going hard before more lockdowns or trade war heats up. But either way, a bit of an unexplained here why shipping container rates are so expensive when you wouldn't think there'd be as much cargo as normal. General Motors did invest in Nikola this week. So once again, it's getting harder and harder for Tesla to claim that they're leaders or they've got the monopoly in this space. More and more people are coming for that sector, I guess, the automation, the tech side of things of your vehicle as well. It's no longer just a car that you drive to work. Here we can see August high yield bond issuance. So absolutely crazy here, $50 billion in August 2020. I think we've got some more stats in the next few slides here. This is the creditworthiness of these different businesses over the last 4 decades. And the corporate bond market back in the 80s, it was high-rated companies that were issuing money for a good reason to build quality projects or whatever it was. Whereas now, look at how much it's dominated by these B and C companies. That's the junk debt. It's really teetering on the edge. And very, very few in terms of the percentage that make up this market of these higher rated companies that are issuing all this debt. S&P 500 year-to-date returns by credit rating. So we can see that the better companies have had the better returns, and yet there's this appetite there just to buy all this debt up at the moment just to make the next payment because that's where the highest yield is. The Fed has our back. Now, another sector that's been booming is the technology stocks, and there's been these specific strategies. The SoftBank have been talking about this gamma squeeze where they're trying to use options and use the retail buying to get this sort of momentum strategy, and it's almost like this forced, it works both ways, up and down, which we saw this week. But when people are buying calls and then they've got to cover those calls, buy more stock, that's kind of this momentum strategy, which has just caused these parabolic moves and a lot of volatility. And we can see that money continues to flow into these tech funds. I think people are looking to buy the dip here. If we look at this chart, it's the time spent in different drawdowns. And basically, we can see here that the significant drawdowns are such a small percent of the overall market trend. Now, that's because we've been in a bull market. You look at any point in history and it basically just goes up as the markets grow with inflation. But look, people are saying these small dips are nothing significant. Very rarely do we have these big retraces. The Fed's got our back, and that's why a lot of people are happy to step in and buy these dips. We can see the number of contracts for a lot of these options traders now being dominated by less than 10 contracts. So this tells us that it's the small retail players which are really playing around in this option space. This is the broad US asset classes, stocks and bonds for US domiciled funds only. And we do see money continuing to flow into the fixed income market like we spoke about there with different types of bonds. Money continuing to come out of equities. We can see this again here, long-term mutual funds and ETF flows continuing to be drawn down on for the last few months. Insider transaction ratio dipped a little bit, but the insiders are still overall net sellers. But we did see on the dip this week that hedge funds did buy the dip, particularly the NASDAQ and those tech stocks there. Now, we've spoken about this at length over recent months about the big tech giants being dragged in front of regulators and different governments. And in Australia, it's heating up this battle between the tech giants and whether or not they're going to allow the news or force them to pay for the news when they're allowing Australian news sources to be shared on these different platforms there. So that is one of the worries. We've also got here the NSA chief joining Amazon. So look, I think the story of the next couple of years is going to be all about our personal data. And this is just, again, such a bullish case for crypto and decentralized technologies to take the power away from these big tech giants. And what makes them so valuable is the fact that they do have all our data. Here we can see S&P 500 returns versus their operating earnings per share versus the sales per share. And what this is telling us is that, people are just overpaying for the same amount of value. It is the low interest rate policy, which has forced these investors to take all these dangerous risks in search for yield. But even US corporate bonds now, if you have a look at the real yield, and this is for the first time ever, it's plunged into negative territory. So because you're getting such a low yield on some of these corporate bonds and inflation is so low, that real rate, you're actually still behind. And that's why people are saying, well, where am I going to park my money? It's the most different environment of all time. So legends like Stan Druckenmiller are saying the stock market is just a raging mania when we actually step back and look what's happening. This is the front of Barron's this week. It's basically saying that, yes, it's a bubble, but it's not ready to pop yet because of the dynamics that are in play. And if you can get a little bit of a yield in some stocks when everything else around you is negative, yielding a negative real rate, then why wouldn't money continue to flow into some of those stocks? Now, obviously, gold and silver are a very attractive alternative in this environment. We can see the commitment of traders report here in Mike Maloney's video, talking about the commercials versus the non-commercials, the speculators and the open interest. So that has bounced back a little bit after open interest dipped back in April, June, July. And I think that a correction would be perfectly healthy here, but in reality, it's probably traders, speculators a little bit. It's no one that's really a long-term believer in gold and silver or the metals and miners that's selling in any real way when they're looking at the absolute snowball of money that can still enter this space. So this is a great chart from Mike Maloney's website, all about the estimated percentage of pension funds that hold gold. And look, last week we did have a news article about the first public pension fund that's come out and said that, hey, we are increasing our allocation to gold. And when you have a look at this tiny little slice of gold and gold stocks, and if we had crypto, Bitcoin in there, that would be maybe, 1% of that again. So that's why we've just got this avalanche of money, trillions and trillions. When we have a look at all the mutual funds, pension funds, sovereign wealth funds, and the amount of gold that they've actually got at the moment, I just think that, it can easily, even gold can go 2x, double, triple from here and take us to $5,000 an ounce gold. But obviously the risk to reward and the potential upside, I believe, is even higher again for Bitcoin. So look, consolidation in gold, any selling opportunity would create a golden opportunity. I do really agree with that. And I personally would love an opportunity to buy more gold and silver miners on that dip. Now, if you're looking to get exposure to just generally the ETFs, the GLDs, SLVs, GDX, GDXJs, we still have that that promo with eToro. They've been generous enough to continue to extend this month after month because so many of you guys have taken them up on that $100 free Bitcoin offer. So that link down below if you want that $100 free Bitcoin, and the tutorial for that is down below as well. But let's get into the crypto news now. So look, I would recommend you guys check out CoinGecko these days. So I do believe that they have become the better option rather than CoinMarketCap. And there's so many new coins popping up. I've got another news article about how you can avoid the scams. But these guys tend to list the better projects sooner than CoinMarketCap. And since Binance took over CoinMarketCap, I think they've kind of just not been as popular in the eyes of a lot of people. These guys are a little bit more community driven. They were the first ones to add DeFi section. And look, I think they've got some exciting things coming up. So guys, do recommend using CoinGecko, and we are going to be look to do some more partnerships and work with them a little bit because they've got a great team which are as passionate about DeFi as I am. Anyway, so some of the scammers behind Plus Token have finally been arrested. This was an absolutely massive scheme, which I believe caused prices to rise and also caused prices to fall when they were trying to cash out some of the $6 billion in crypto. So look, good news that they've been caught. In terms of the digital payment space, this continues to absolutely heat up. MasterCard launching their virtual testing environment for central bank currencies. We've got Visa adding crypto lender Cred to fast track the payments program there. Square launches this is like a patent alliance to fight the patent trolls. So they actually want to get patents, but then add them to this open source platform rather than, I guess, like the Craig Wrights of the world, which have got all these patents and they're hoping to win them to say, haha, you can't use my technology. This is the opposite end of the spectrum where everyone gets the patents for specific tech, but then they pull it in an open source thing so anyone can use it to protect from people trying to game the patent system too much. Another cool news announcement here from eToro was their universal basic income platform. So this is what they're calling the good dollar, backed by DAI, and trying to, I guess it's a bit of an initiative because of the high yields available in the yield farming to hand out some crypto-backed stable coins, promote financial inclusion to those that need it most. So look, very, very cool. And we do sometimes forget when we're getting these high yields and big gains that there's people out there where, $1 or $2, it means a lot to them putting food on the table. EU ministers demand that stablecoin rules that could stifle Libra. So I think Europe are another one that have trialed a few of these alliances and they want to get the digital euro up and going. We've got little banks that have experimented with their own technologies. I know in France again this week they're talking about listing theirs. But it's all about regulation and who can get there first. And look, China are desperate to get the digital yuan up and running. Then America are going to get jealous, thinking about the digital dollar. There's a lot of Aussie dollar stable coins already. So there's all that spectrum about the governments who are going to launch it first, the banks, the central banks, and then the tech giants like Libra that want to launch their own stable coins as well. In terms of regulation, Overstock's T0 did win approval from FINRA to launch this retail broker-dealer subsidiary. So look, STOs, that space of securities has fallen behind a bit, but maybe that's going to be more popular in 2021. And another exchange from Fetch AI called Metalax, they're launching a decentralized way to trade more commodities, gold, silver, cobalt, oil, so a few different ones there. Look, the world's at your fingertips these days as a trader, the number of platforms and the different commodities you can trade. So really cool stuff there. All right, so into the gaming news, where Fortnite have attacked Google's chokehold on the Android markets in this lawsuit over V-Bucks. So Epic Games and Google, it's this showdown. It continues. Look, tech giants. More news this week from Coinbase and their CEO Brian Armstrong saying that Apple is just so anti-competitive against Ethereum and all these dApps. So this is the same argument here from Fortnite and Google. Basically, these tech giants are saying that you can't have anything where it integrates payments or even DeFi apps, which are basically just websites. Apple's not going to allow them. So this is the absolute perfect storm that is begging to be disrupted by Ethereum and these platform-based technologies where you can put any dApp on there. It's not up to a tech giant that says you can't do this, you can't do that. So I think they're just creating the perfect environment to be disrupted. This was a fantastic thread from our mate DCL Blogger, all about how NFTs are just catching fire. And look, if you're one of our members, you'll know that for months I've been saying that this is the next big hot thing. While others were starting to get interested in DeFi, we've been, I guess, busy taking profits and looking where we can plant seeds. And there's probably half a dozen or so projects which I'm very, very bullish on in this space. But check out that thread from him if you haven't already. And he is a member of our group and he's been doing regular updates for our members on the gaming space as well. So thanks for that, mate. A big thanks to Angelo. So this was the first draft of the Nuggets News headquarters that we want to set up in Decentraland. So look, I did open it up to the community, the public as well as our members. Put forward any design ideas you've got, guys, for our headquarters in Decentraland for interior or exterior, because we will be having a lot of meetups there in future. There's a pretty cool one here. This is an example of game credits. So it's almost like a console style base that they've got there. So a lot of the best companies and gaming projects are all going to set up in Decentraland. And I love the collaborative nature rather than seeing each other as competitors. So look, so bullish on that space, as you guys know. This week we did get some news that a lot of the whales have been gobbling up real estate in Sandbox. So that's very similar concept to Decentraland. Minecraft NFTs are coming to the blockchain. So this is the partnership with Engine. So this is basically a plug-in there. So I just love that they're going after these games with millions of players. NFT market Rari token absolutely pumped this week. So this is 100% gain after the coin fund announcement. But this coin basically went from $1 to $10 this week. And this was another one that we were fairly early on. So thanks to Matt as well, who does the research, head of research at Nuggets News. He put this one under my nose a few days ago, and Rari was up 500% in 2 days at one stage. But basically, this is a way to issue NFTs, anything from songs, insurance, DeFi, content creation. You make that as a digital token, then you can insure it, you can sell it, put on their marketplace. The ideas that we're going to see from here are just awesome. And look, they're not the only ones doing it. Block Party partnered with a DJs here for digital collectible music. And obviously Red Fox Labs, you guys know the multifaceted business model that they've got as well. I highly recommend subscribing to their newsletter because I believe they've got a few big months ahead in terms of news and updates. And they're the sort of guys that are head down, bum up, and they don't do much marketing or whatnot. So make sure you do get all the news from their newsletter there. Now, Andre and Wi-Fi, that are the powerhouse there, they did get involved this week in the NFT space, reaching out to Rari and other projects. Nexus Mutual, they want to integrate all that so you can start to insure all these NFTs in a fully decentralized manner. Now, what Andre's proposed here is a futures market for those people that aren't comfortable staking their Nexus Mutual tokens. So almost using the wrapped Nexus Mutual. So that's the non-KYC version of the token. And if you develop this futures market, you can almost come and collect your payments, and it's almost like a virtual way to stake at a future date. So look, that's pretty complicated stuff. I'll cover that in more detail for members at one stage. But either way, the options that you have at your fingertips to get yield and growth and payments and bonuses, it's just going to attract more and more people here from this zero interest rate environment. Now, Wi-Fi continues to power higher. $44,000 it hit last night. And I think a few people took this tweet a little bit too seriously, as I said in a follow-up tweet. But look, basically, the race between Bitcoin and Wi-Fi to 100K, it's not for a winner on or who's better or anything like that. It's just a little bit of fun because we rarely see coins that have a high price like Bitcoin. More often than not, teams have an increased supply and the coin has a lower value, and that actually can force beginners to FOMO in and buy those cheaper coins. But I think it's great that we've got a coin that's got such a high price, even though market cap is the only thing that really matters for a true indication of how good a project is and how much it's growing. But this is going to get mainstream attention when Wi-Fi hits 50,000. Then I do think it's going to get to 100,000 eventually. And I don't believe it's a bubble. I believe these guys are probably one of the best, if not the best DeFi project. As I just said, they're getting involved in NFTs, getting involved in insurance. They've just launched their own stablecoin, stable credit. This is a lending protocol. This is almost like Maker in terms of being able to mint your own stablecoin there as well. So they're just such a multi-pronged, multifaceted project with Andre, who's an absolute gun. He's become the Satoshi of DeFi, people call him. And when you've got a project like that offers such good yield and very few coins, there's a reason that it's going up in price. Now, Reflexer Labs and Chainlink partnered up this week. These guys are launching Ray, so it's another play on a stable coin. If you want to know more about that, this was one of our 3 spotlight reports that we dropped this week, the deep dive research for members. But check out Reflexer if you haven't already for their unique take on a stable coin there. Ren and UMA also partnered up this week. So what you can do here is mint your own USD by depositing through the Ren system your UMA coins as well as the Ren BTC, I think it is, into that platform there to mint UUSD. Oh, it's a mouthful there. There's so many different types of stable coins, but this one is a way to get Bitcoin backed yield. So very cool stuff, and that is going to bring more people into the DeFi world with their Bitcoin to wrap it up, or with the Ren Bitcoin, deposit it, mint your own coins. Again, it's very similar to Maker, being able to mint stable coins. USDC is now capable of 1,000 transactions per second with near zero fees. So they have basically said that they are going to pay the gas for a lot of people. It's also available on Algorand. And look, the stablecoin space is just absolutely heating up. If you had said at the start of the year about Visa, MasterCard, the central banks, as well as all the crypto stablecoins that are just flourishing, I wouldn't have believed you. But here we are, and maybe this is the thing that takes us to that $1 trillion market cap, just so many of these different stable coins. And this is what I want to continue to drill down into with, Raul and some of the more macro players, because I still think that they're just not understanding the tidal wave of disruption that's coming for banks and payment providers, as well as central banks and governments, through the digitization of money and stable coins. All right, so Uniswap and Sushi, this heated up this week. So Uniswap basically hinted at their version 3 and a token when SushiSwap drained a lot of their liquidity. We then had Chef Nomi leave. Everyone was, hating on him and people calling me a scammer for talking about SushiSwap. He then did the right thing and actually returned all the funds. We had Sam from FTX step in and I guess help the project through that tough time. Now, just recently, we've seen a lot of funds start to come out of SushiSwap again as the rewards start to decrease. And one of the things that they wanted to do was decrease the inflation rate. So I'll talk about that in just a second. But look, basically, I think with FTX behind it, they've got Serum as their decentralized platform DEX that they're really going after here. Solana that they've partnered with. So Solana had Tether issued this week announcing wrapped Ethereum. If they can integrate Sushi into this model as well, I think that is really bullish. But we do need to acknowledge that Glassnode did a deep dive on Sushi and said fair value was around 31 cents. But this was before the governance vote to reduce the supply of sushi by 90%, that new inflation rate from, I think it's 1,000 sushi down to 100 sushi per block. So, look, I think that changes the model quite a bit. But either way, I really think it depends on whether or not they can maintain that level of liquidity and trading fees. Because if they do have billions of dollars under management and you're getting a clip of all the fees, it becomes a no-brainer that people are going to want to own a percentage of that. It's a very, very simple model. Now, we've got more, I guess, copycats coming out trying to do the fairer thing. So Balancer fork Cream gains 200 million. A lot of competition between Uniswap, Binance, and some of these centralized platforms are coming out with incentives and funds to try and attract users there. Crypto.com, this was another fork and just clone copycat of Uniswap, offering huge incentives. So here they're saying that you can have a 20x multiplier on your yields. And these yields were in like the thousands of percent. But what people have got to realize is that they're paying you out in the CRO token, and they're getting you to try and lock up your tokens for like years on end. So this is something that I've seen as possibly a little bit of a red flag, that they're trying to do everything they can to get people to lock up tokens and not sell, but then paying out huge amounts. So you're just getting diluted so much if you're holding this CRO token. So look, that's not one that I'm really a fan of. Hobby also introducing their product, trying to get people to come over there, stake coins, get that liquidity. Again, they're offering huge yield, but they're subsidizing these models. So everyone is trying to compete at the moment for all that liquidity in the yield farming space. 1,000 new tokens, token pairs have been added to Uniswap in 1 week. So a lot of these are scams. You really have to be careful out there. And that's when you can go to like the likes of CoinGecko and click on the project that you want to look at and find the real token on Uniswap. So let's just, for example, click on Wi-Fi. It's going to bring up the information page there, and it's going to tell you on Etherscan the actual contract address there as well. And that's where you can go over to Uniswap and just copy and paste that if they don't have the coin listed. But what I did want to share with you here was the fact that we've got 660% more DAOs as well. So just another example of a sector that we're very bullish on, decentralized autonomous organizations, that's really, really growing. But we've got these lists, so you can now import the lists, and these are trusted tokens that have basically been vetted by different projects or communities. So Kleros is another like an online sort of court judiciary system. I really like their model, and this is the interface here where you can choose to integrate the token list of these different platforms, and they actually created a way where you can add your token and get rewarded through their token for securing Uniswap with these decentralized lists. So another little cool little concept there from Kleros, and Kleros is a very interesting project, very similar to Aragon. I really like what they're doing. Here we can see, again, this ties in with everything we've just been talking about. Smart contracts launched on Ethereum near all-time highs. So this is in 1 day. On Wednesday, the 9th of September, there's 300 new smart contracts launched. It's just growing at such a fast pace, so we need to be aware of the scams. Basically, all of this is never going to go mainstream until we have layer 2 integrated. Loopring is one of the leaders at the moment trying to integrate that. Amisa Go is trying to get there. Raiden, XDAI, this that I just brought up before here. So this is StakeNet as well, partnering up with Raiden for a lightning fast DEX. And these are sort of projects which are very, very promising, but until we have them up off the ground, we can't really get DeFi mainstream with thousands of users because of how expensive it is to use these different platforms and protocols. All right, so the devs are very positive about Ethereum 2.0 Genesis launch, talking about even November as possible for where Phase 0 can go live. And in the last few pieces of news for you for Bitcoin, we've got LedgerX launching a mini future. So those of you that aren't whales and can't afford some of those bigger contracts, they've now got a mini contract which is settled in real Bitcoin, which is what we like to see. Blockstream have also launched their DeFi play with a little decentralized exchange on Liquid networks. This is called TDEX. It's only in alpha. And this is what's going to be interesting to see whether or not they can pull this off using atomic swaps and the Bitcoin technologies, or it's going to be a matter of the network effects, which you can't really compete with on Ethereum. So either way, we have some interesting technologies finally coming to Bitcoin. So this is another smart contract, I guess, prediction market that's been deployed on Bitcoin. Look, I love that it's all here. We love competition, and it's been promised to come on Bitcoin for years and years, but it is finally there with some cool little, I guess, extra layers and things you can do on Bitcoin. So as we get into the technical analysis here, this is a big picture, high time frame chart that we've been looking at for a while. And I think it was a few months ago, back here in June, when I said, look, everyone is talking about this sort of red and orange scenario here and pretty bearish. Look, I was a little bit unsure on what was going to happen in terms of the stock market and whatnot, but I think when everyone's in bearish, that's when these blue and greens were far more likely in my mind. And at the moment, it's been a perfect breakout, retest, and now I am looking for us to push higher until proven otherwise. So until we sort of lose this level, there's been buyers continuing to step in under 10K. And until we break that trend on the chart, I actually think that everything is looking really great at the moment. And look, final piece of news here. I think when people say that governments won't ever let Bitcoin win, look, Bitcoin is already the 6th largest currency in the world. If you look at it by market cap compared to that long list of countries and their currencies around the world, it's already number 6. So it's only really got, the euro, US dollar, Chinese yen, Japanese yen, Chinese yuan, and pound, British pound in front of it, I believe. But yeah, Bitcoin is continuing to grow. So it's a matter of, well, say to those people, well, who are they that aren't going to let it? And where are they? Which countries? Because it already is growing and really beating the local currencies in so many countries. That's the chart that we just looked at. So whether or not you want to look at it on a log chart or just a regular scale, if we get rid of some of these lines here, I just want to show you what I'm looking at here in terms of this horizontal support. So when we get down and we touch these wicks in areas where we've just had a lot of previous support and resistance, that makes me very, very bullish. It creates these, I guess, zones, and you can continue this all the way back here. So when we get these touches around these levels, that tells me that there's a lot of interest there. So whether it's where the body of the candle closed or the wick, there's been a lot of Bitcoin change hands at this level, and I think buyers are very, very happy to step in and buy anything under 10K for the time being. So at the moment, that's how I'm viewing Bitcoin. If the stock market rolls over and goes down, then yeah, that's when I think maybe Bitcoin does follow it down. Ethereum, let's just clear that junk there. Ethereum's had a huge move up. Again, the same as what we were just talking about there, where we've had a pullback right to these levels where there's been a lot of volume traded and we can see the buyers stepping in. So look, guys, that is what I am looking at the moment. It's been a very exciting and wild ride the last few weeks for anyone that's in the DeFi space with all the yield farming. Look, I'll do our best as a team to keep you up to date and in front of the herd for everything that's happening. So head over to nuggetsnews.com.au to join us if you haven't already. But I hope you've had a good week. Smash that like button, subscribe if you haven't already, share these videos around, and I'll talk to you again soon. Cheers.